Hello and welcome to another ACY Securities daily report video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Now, the other part of today's interesting topics to look at is coming out of Australia. Now, we've already heard from the Reserve Bank of Australia's Assistant Governor, Chris Kent, the guy that's sitting behind me now. And he has spoken about the idea of small to medium enterprises, more specifically on small businesses that are likely going to fail is set to rise. So that's not a great number for us to really be paying attention to because we don't want to see businesses fail. We like it when businesses do well. It's good for the economy, it's good for trading, it's good for us. So in this instance, we are a little bit concerned about it. I am going to be paying some close attention to what we see here. Now, so far, what we can summarize is that he anticipates that with the closure of JobKeeper payments and the support being withdrawn on COVID-19 front for stimulus here in Australia, that these small to medium enterprises are likely going to fail. But this puts a lot of pressure on the RBA, who are already under a significant amount of pressure, particularly keeping the economy going. The SME side of things is really just one small issue for them. And there's facing multiple challenges across the board from the RBA at the moment. Now, what we're really focusing on at the moment is really about tussling with the yield curve controls. Both Japan and Australia have introduced the YCC, or yield curve control mechanism, to try and help support the economy. The Japanese edition uses modifications on the 10-year, trying to control the 10-year bonds, whilst here in Australia we're dealing with the 3-year bonds. They are very different scenarios, but we've seen a lot that's gone on in Japan over the last couple of decades with very low rates in the last 4 years of yield curve controls, and they have made a bit of a strategy to try and replicate, or at least better it to what we need and what is more suitable for the Australian economic environment. Now, if they remove stimulus like they are doing now, then I'm anticipating that the Australian dollar is likely going to climb. And the one thing that we can always keep an eye on when we're looking at it right now, especially when we think of yield curve controls, is if they're going to be ending that party soon or late. And right now, they keep on saying the same sort of iteration as what we hear from the Federal Reserve in America, is that they're not going to try and do anything. They want to keep an eye on it, and they're hoping to leave it lower for longer. Now, at this point in time, the 3-year yields, the big attraction points are to look at the April 2024 bonds as well as the November 2024 bonds. They're the ones that are getting the most speculation, the most volatility, with people trying to guesstimate on whether they're going to extend, delay, or cut it short in terms of when we're going to have that end to YCC. So some things there for you to keep an eye on, particularly if you're trading the Australian dollar and, of course, Australian stocks. All of these will have some level of impact. Now, moving on from that, if you do have any questions from today's video, please feel free to shoot me a message at any of my social media counterparts that you can see above and behind me. And of course, check your economic calendars. I've got one on the screen for you now just to have a look at any of the things that I am interested in, but make sure you check your own to ensure that you don't miss something that I may not have included. Now, also, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.